Hello and welcome back to Doireann TV. Today I'm joined in the studio with Fortunato Costantino from Sahara Energy International to discuss the performance of oil. Welcome today.
Hello.
So first of all, how is oil performing since the July 1st ban?
I can say that in Europe the security of our supply was not substantially affected. We have to say that in the last 2 years, just 4 or 5% of the entire supply to Europe was coming from Iran. So it was quite easy to find alternative sources for that. In particular for Saudi Arabia, which is able and willing also to increase production in order to meet additional demand, also from Russia, from Iraq. And don't forget also Libya is recovering quite well in terms of production. So I can say from the supply point of view, Europe didn't suffer a lot. From the cash flow or pricing wise point of view, for integrated European oil and gas companies, the impact was, I can say, quite neutral. From the pricing point of view, there was a change on the oil spread prices because of the alternative sources pricing. Most of the cases in a lower discount to that Brent prices. In Asia, the situation is quite different because the top 4 oil buyers from Iran, Japan, India, China, and South Korea was affected quite a lot, especially because part of the sanctions were related to affecting the shipping, the insurance coverage of the shipping industry. So 90% of the tanker fleet in the world is linked to Western-based companies, the so-called P&I, the potential indemnity clubs. So it was very difficult for oil buyers in Asia to find ship owners available to load and ship and deliver products in their countries. As a consequence of that, for example, in Japan, very recently, the parliament passed a law in which they are allowing to cover the insurance for shippers from Japan. But if you consider the combination of European and US sanction, Japan at the moment is lifting almost half of the volumes in July in comparison with the previous year. So sanctions are affecting somehow also this area. India and China, different situation. There is no sovereign coverage of insurance from governments, so they were forced to lift cargoes relying on the tankers directly from Iran, the Iranian tankers. So it's a different way to supply, relying just on the Iranian fleet. But also in this case, we have seen around 25% of shipment less than previous year. South Korea at the moment stopped completely. So 2 different situations with quite a bit complicated, let's say, approach from different countries. But at the moment, it seems that the sanctions are working quite well.
And the US at the moment is working on a new package of sanctions to restrict oil revenue in Iran. How badly is this going to affect the performance of oil and Iran's economy?
With this new package, if approved as expected in this week or next week at the most, the approach is different. It's going to affect the capabilities to hamper the ability of the Iranian banks or Iranian banks with Iranian interest to perform in transfer funds electronically. So it's most of the, not only, but most of the sanctions related to the capabilities to transfer money from the banks. One of the protagonists of this package is the Belgium-based company SWIFT, the Society for Worldwide Interbank Financial Telecommunication, the so-called SWIFT, which belongs to the world's largest banks in the world. And you can understand the implication of that and the interest in this game. They are huge, and of course it's very difficult to finalize the final package. I'm very curious to see what will be the final outcome of this, but for sure there will be some more difficulties from Iranian banks to transfer money. I expect on the other side, from Iranian side, to find different ways to mitigate these situations, like barter trading or maybe some Islamic financial tools that can mitigate but not eliminate this problem.
And what is your short, mid and long-term outlook for oil?
So far, in terms of supply demand in various areas of the world, I can see that the oil market is looking for traction. With the US economic condition, whilst the India and China demand and the persistent tension in the Middle East can be the drivers, the key drivers for bringing higher flat prices in the short terms. In Europe, as I said, I don't see a part of the weakness of the supply-demand ratio from distillates in the region. I don't see big issues affecting prices. So in the short term, we see the oil prices in the range of $98.106 US. Of course, if all this scenario will disappear, all bets are off. In the longer term, of course, if the Asian buyers will keep lowering the lifting of crude oil from Iran, OPEC has to increase production, and probably the spare capacity from these countries will affect the flexibility of the global oil market, creating some, let's say, uncomfortable feelings in the flexibility to respond or to react to unpredicted interruptions of oil flows from wherever else. So in this case, we see the price of oil quite higher.
And what is your outlook for natural gas in the view of new unconventional sources in stream and its competition with oil?
We have to say that between now and the next 25 years, the energy demand in the world will grow around 25–30%. This is driven by population growth mainly. We will be 9 billion people in comparison with the 7 billion now. And of course, power generation and industry will be the leading factors of this growth. But at the same time, we will assist to a switch of the fuel mix. What does it mean? This means that gas and non-fossil fuel will gain share in the utilization of the market at the expense of the coal and oil. Natural gas is the fastest growing energy elements of this scenario, and especially for LNG, the liquefied natural gas will play a strong role in the future. About the unconventional resources, you mentioned the discoveries and the capabilities from the technical point of view and the lower investment needed to exploit the resources like shale gas in the US, but also in Europe, probably in the near future, is opening completely new horizons in the natural gas business and market. Countries or areas which were importer of gas until few months or few years ago are becoming exporter. This is impacting, of course, the supply demand of the world, in the world, and also the pricing system on global basis. So US started to be exporter of gas, and this is affecting also the prices on that. New green regulations in the world, in Europe in particular, but is according to Kyoto Protocol also elsewhere, are bringing, especially the power generation, to be built up, refurbished under gas-fire concept. Renewables, of course, are also playing a big role, but natural gas will be very soon the second, in terms of energy-intensive use, the second sources of energy. So in the long term, we see a decline of oil, and of course, again, in the share of natural gas. Coal will play a different role. It will be at the moment we are assisting to a quite higher demand of coal, which around 2020 should reach the plateau, and then the decline will start.
Thank you very much for your view on oil. And thank you for watching Doireann TV. If you like what you see, then click back to the website for more. But for now, have a good weekend.